Hi students, okay, we are discussing on exam style practice question, chapter 22. Okay, let's go through. Question number 1. The data below has been extracted from the statement of financial position of a limited liability company, Safia Soft Furnishings SSF. Okay, the dates 30th June 2012 and 30th June 2013. Non-current asset is 2,500 for year 2012, and for year 2013 is 2,900. Net current asset is 230, and for June is 2,900. 30th June 2013, 2,900. Net current asset 230 for 2012 and 150 for 2013. Non-current liability 130 for 2012 and 420 for 2013. Shareholders equity 2,600 for 2012 and 2,630 for 2013. Okay, let's look at the first question. Define limited liability, which is 2 marks. Okay, the answer: owner's liability for business debts is limited to the amount invested in the company. Owner's liability for business debts is limited to amount invested in the company, and they cannot be forced to use personal wealth to finance the debts of the business. Cannot be forced to use personal wealth to finance the debts of the company. This is total 2 marks. Number B, define shareholders equity: money invested in the business by the owner of a limited company. Okay, answer should be money invested in the business by the owners of a limited company. C, outline why SSF needs non-current asset. Okay, why? Because non-current assets are resources owned by the business, which will be used for a period longer than 1 year. So SSF needs a factory to make its product in, and they need machinery to make the products, and also they need vehicles to transport the products to customers, and also they need computer to control inventory and finance. Okay, this is total 4 marks. Okay, question number D. Explain how 2 stakeholder groups of SSF might use the statement data. Okay, the first one could be banks. If SSF asks for a loan, the banks will want to know the value of its non-current liabilities. So if existing borrowing is high, then the banks might think SSF is too risky. However, would also look at non-current assets as land, buildings might be used as collateral against any further borrowings. That's one. Number 2, you can say shareholders. Okay, shareholders as owners of the company want to know how much the business is worth. Can also see if the business is well managed. Example, does it have good working capital? Okay, so this is total 6 mark. Okay, 1E. Do you think the management of SSF should be concerned about the change in net current assets between 2012 and 2013? This is also a 6 mark question. Justify your answer. You can say net current net current asset is SSF working capital. The value of working capital decreased by 35%, means that more cash left the business than come into the business. So if the trend continues, SSF might have a cash shortage, might not be able to pay debts, might have to use an overdraft. Okay, that is the alternative, and this can be expensive because their interest rate is higher and they have to pay within 1 year. So net current assets are positive, so not currently a problem. So that would be your answer, 6 mark. Okay, let's look at question number 2. Okay, below are extract from the statement of financial position of BJ's for 2012 and 13. Okay, non-current asset is 2.7 for 2012 and 2.9 for 2013. Current asset 0.5 for 2012 and 0.8 for 2013. Current liability 0.3 for 2012 and 1.0 for 2013. Non-current liability is 1.0 for 2012 and 1.1 for 2013. And owner's equity is 1.9 for 2012 and 2.2 for 2013. Okay, question 2a. Identify two non-current assets that BJ might have. Okay, so it can be land, buildings, machineries, and vehicles. Okay, number B, define non-current liabilities. Okay, the answer should be money owned by the business to lenders. Money owned by the business to lenders, and they do not expect to prepay the amount within next year. So they do not expect to repay this amount within next year. Okay, C, outline two elements of BJ's current assets. It could be inventories. Okay, inventory, if you are saying inventory, it should be raw materials or part finished goods and also finished goods. And the other answer should be trade receivable, which means money owed by the business, money owed to the business by customers who have been sold goods on credit. That is for C. This is a 4-mark question. Now let's go for D. Explain two difference between BJ's statement data between 2012 and 13. Okay, non-current liability increased by 0.1. BJ must have borrowed money long term. Net current asset decreased from 0.2 to 0.2 because it's becoming negative then. Or BJ might have cash flow problems. Okay, so this is a total 6 months. So your point here is non-current liability increase and also net current asset decrease. Question E. Do you agree that the statement from BJ's statement of financial position is more useful to internal stakeholders than external stakeholders? Justify your answer. Okay, if you're saying internal first, internal stakeholder. Okay, internal stakeholder might use the information to identify problems, probably have a better understanding of financial information. Internal stakeholder knows how statement of financial position figures have changed and therefore have a better idea of how the business is currently performing. Again, internal stakeholders might use the information to identify problems, probably have a better understanding of the financial information. Internal stakeholders knows how statement of financial position figures have changed and therefore have a better idea of how the business is currently performing. Okay, another point is external stakeholder. Can say external stakeholder might not understand the statement of financial position. Information becomes out of date as soon as the statement of financial position is produced. So external stakeholders will not know how the figures have changed, and statement agreeing or disagreeing supported by you have to support by relevant points. So I think your answer should be agreeing because both has to know, internal stakeholder as well as external stakeholder, about the figures of the statement of financial position. Alright, that's all guys. Okay, see you all. Bye.